It's not enough to have a draw on liquidity. I wanted to take advantage of the opportunity of showing you what I was outlining last week. That way you can see that there is an advantage to knowing what market profile you're in. Now, I don't mean market profile in the sense that it's the volume overlay on top of your chart. I'm talking about the kind of like the schematic, the roadmap, the lay of the land, if you will, how the market will behave, let's say, like that. It's not enough to have a draw on liquidity. It's important for you to also have a understanding of how the market will deliver price. And if we don't have a acceptance to how the markets are electronically delivered, that means it's AI. That means it's algorithmic, and that means when we do our buying and selling, we're pretty much subservient to what that price engine's doing. So if the engine on price is rallying higher relentlessly, and it matters not how many people are coming in to short sell it, it doesn't matter if there's a lot of buyers, it's just in a buy program, it just keeps going higher. We're going to get filled based on that. And one of the advantages that I had when I was coming up is to, number one, lose a lot of money doing things incorrectly, and then finally learning the lesson to look behind price and not just simply say, okay, I want to be a buyer because of this, or I want to be a short seller because of that. I needed to know a lot of elements about time, and I wanted to know what these conditions would look like, what characteristics would they have that would repeat when I would go in and expect the market to perform a certain way, and then it is denying me of that opportunity to see precision, timeliness, the explosiveness that I would want to see in my short-term trades. What characteristics were either noticeable before going into that condition and then not seeing it realized in price action and therefore losing, or finding the opportunities where these characteristics would not be present that would hinder my ability for the trades that I would participate in to see profit. So differentiating the market conditions between a low resistance liquidity condition where it's easy trading, very fast runs, easy, obvious levels for targets, obvious level where your stop should be, and just a real fast run to targets. It's a real pleasant environment to trade in.